Hello everybody and welcome back to the Crypto Look. I hope everybody's having a wonderful day trading the market. I know it's been a little bit, but I'm happy to be back, and we're going to dive into some of the technicals. And honestly, I feel like I came back at a really good time because right now there is a lot of interesting news going on within the markets. We're going to be addressing really the interest rates going on and really the Federal Reserve relaxing on that, which is kind of scary as far as where we are at, and it could be bad news only in the sense of it could show that our economy is actually really weak, and it can open up a downslide in the market, but we will dive into that in a second. We're also going to be talking about cryptocurrency a little bit. Bitcoin is our go-to, we have to at least address Bitcoin, and then we're going to be talking about US and then China trade relations and kind of where we're headed, and the optimism and the cynicism revolved around getting a trade deal passed between the two countries. So with that, let's just dive into it. So to start off, I think that the good place to do is to kind of get a rough idea of what's going on with cryptocurrency, right? Cryptocurrency has not seen the best of days recently, and it's just been on a downward spiral really since 2018. And I really want to kind of show that, it's not, I still think that we have an opportunity right now, because at the graph, it's just been downwards, but I feel like we're finally at a point where we have been oversold. We've been playing within this area for an extended period of time. I've been telling you guys to really watch this Ichimoku cloud from all my past videos, and there's a lot of reasons for that, and I think that we're kind of getting to the tail end of it, and we could be setting ourselves up for a breakout from these lows. Now, where I am specifically focusing my attention on is I think that you really need to be looking at this bottom right here. I think that there is a very high likelihood that we're going to fall back and test this bottom, and what I would like to see, especially for this industry, is for us to double bottom out and then have a breakout through the clouds. Another encouraging thing which I'm looking at is this pocket that's kind of showing within the Ichimoku clouds. I think that this could provide the opportunity for us to at least collapse down to where I am expecting, which is this line, hit it before trying to pop out. That would be a very optimistic scenario for cryptocurrency as a whole, but in general, it's kind of like the fade has kind of faded a little bit concerning cryptocurrency at the moment. I think that it is going to have its time, but I do think that hard assets are really at their prime, and I think that they're are more enticing to the older investors, and that's really what you want to be looking at, especially because cryptocurrency is more considered a younger investment. But with that, I think you really got to reference other markets to get a general idea of what is going on with cryptocurrency and with Bitcoin, because I do think that there is an opportunity for growth. I think that, like I said, by this week, I would like us to hit this bottom and then for us to get a bounce. So I do think that the bounce is coming very soon. And to kind of guesstimate where this will happen, I think you really got to look at, for example, let's go into the Dow Jones. Now, the Dow Jones graph is very interesting, and I think that it tells a lot of the market. I think that this is one of the very important ones that you need to be looking at. Another one that you really need to be looking at is the gold market to get an idea of what is going on. So as far as the Dow Jones is concerned, it isn't at its prime health, versus this straight up shot. I feel like that was way too extended, and that's why we had this huge sell-off and this fall down to here. We called that on this channel. We did really good at basically getting out of the Dow Jones at the highs, and I just call it consolidation. I'm coming back to kind of say that this is an important point to check, and I think that there is some optimism kind of if we go into the Federal Reserve, and we can look at the rising interest rates, and kind of there's a few articles that really go into it, but basically the Federal Reserve made an announcement that they are debating on really not hiking it again, at least for the time being, to help us sustain the current growth that we have, because they're scared of the repercussions it could have on the market if they hike interest rates again. So I think this is very important to basically convey in retrospect to the Dow Jones, because if we do look at this and kind of where this was announced, and I think that you really kind of of want to look at this is see that the candles recently, like, they're not all that strong, right? So this announcement came out yesterday, and we really haven't seen huge candles in retrospect to some of these other really extremes. And for this good news to be announced in the market and for us to basically putter, I think what you need to be looking at is within the next 3 days, I guess going into Monday would be at the very latest, Monday or Tuesday. You really want to see us get rejected. And if we get rejected, I don't think that's going to be a good thing for the market at all. I think that that's going to signal, I guess the other stuff that is to come. I think that the one thing that you can kind of count on in retrospect to maybe having a chance at breaking out is going to be the China relations. But the thing to kind of note on that, and I think that you can kind of put this in your calendar, is the Chinese New Year. And I know that the Chinese New Year is a really long event for China, and I know that it's really starting off February 5th. So I would give that, a little bit of time in retrospect to a trade deal, and in retrospect to kind of what is going on here. I think that this could provide the extra bit of time for us to play within this wedge before, possibly getting that deal, and that could be the catalyst to help us break out and to really maintain this trend line, which is going to be this lower yellow one. That's really what you would like to see. But if it drags on, past the Chinese New Year, I give it a week past or longer. I think that is going to signal in the market that it isn't coming, and I think that that's what you really need to be focusing your attention on as far as the stock market is concerned, because I do think that as far as investors are concerned, is they are looking for some type of trade deal between the U.S. and China to help both countries grow that is more fair than its current situation. And although I have stated before, I don't think that China is ever going to get to the same level of trust as far as a trading partner is concerned as it used to be. And I still think that India is a specific area that you might want to be hedging some of your investments concerning the U.S. and China trade relations. I do see, this as just a time which you should be watching. I think that if you do have any assets after getting in at this bottom, this would be a really good place to start selling and consolidating. And I would wait out until after the Chinese New Year and then start making my buys maybe at this trend line, and you can start picking up a few. But if we start breaking down past this, I really would be working on trying to get out of the market because that could show a very hard fall. And there's a lot of respected investors that I watch that are signaling that March really is going to be a rough time for all stocks and major assets. So that's what I would be looking for. Now, outside of that, I think another important asset that you need to use in your strategy when kind of going about this is the gold market. I think the gold market has been one of my best calls, and that's really why I haven't been talking about cryptocurrency that much and posting all that many videos, because it's kind of hard. I've been just on the gold bandwagon, but you can only say so much about gold until it gets to the point where you need to start looking at consolidating. But if you have watched my past videos, we did get into gold at this point. I've gone over it again and again, so I won't include on this one. But we got in at really the perfect time to really enter in the gold market, and this is whenever I called it. We have got 11% return on our gold investment, which is very nice. I think that we have a little bit more to go as far as growth is concerned, but this is the point that I am definitely looking at getting out of the market. I think if you go on, and I'm going to jump into the week because it demonstrates the gold market the best, but if you do look at this wedge, this is a very strong wedge that is signaling when I think that the depression or recession is really going to kick off, is once this wedge really ends. I think that that's really going to be the catalyst, kind of showing if the current political trends continue, the current fund continues, and the markets continue to go the way they are. I think that we can drag this on a little bit longer. But I think that I would be expecting a consolidation one more time, and then after that is whenever I'm going to be looking for the wedge breakout. So I would definitely be picking up positions. I think that your best chance scenario is to kind of sell at the top of this wedge, and I guess where I would be looking at as far as picking up positions, I will signal this in grain so you guys can get an idea. But anywhere right here, if I can get anywhere in this area and I can start picking up positions, I'm going to be jumping back into the gold market in prep for this next run. And I think this is going to be a very big run for this asset class. And it is a long time coming because this has been a really long period of time. Each one of these candles represents a week. So, from the extremes, down to where we are right now, if you look at historically, gold as an asset, it has done very, very well. And I do expect gold to have one last good run, and I think that this is going to be the one. So there's a lot of investors that are looking at that. I think that, I'm still on that bandwagon, but I do think that we do have one more consolidation period within the gold market to be looking out for. Now, I'm honestly amazed at the bounce that old tech has really gotten in regards to Facebook, Google, and Twitter. And I really thought that, if you look back, I guess 2 months prior, there was so much FUD in relation to these old tech companies, and it really did a number in the price as far as them going up to Congress, answering for a lot of the deeds that happened in the past. Basically, the threats of regulations always coming through, and then you had a whole bunch of other areas that were really concerning me. I do know if you really want to look at some of the pros that is helping the tech industry is during the border wall, you're having Trump really offer basically visas as far as the needed employees for these high paying tech jobs. I think that that's a bad thing in general because I think that we shouldn't be giving away especially these tech jobs to other countries, but in consolidation to kind of get the border wall funded. I know that Trump has kind of changed his tone and his opinion on these visas, which is very discouraging to me as a programmer because most programmers, especially if you're a naturally born here in the U.S. programmer, you're not going to be a fan of it because it takes away jobs that could go to other Americans in these fields that are high paying, good paying jobs. But with that, it does help the market caps of these tech giants. And you're definitely seeing a bounce go on here within them. I don't think that these are still assets that I would be getting into at the moment, especially Facebook, and I think Google is also going to have its fair share of FUD continue to come, especially down the road. And the way I'm looking at it is the 2-year time frame. And as we are getting closer to the midterms, I think that you're going to see a lot more controversy come out in retrospect to these huge tech giants, and this is very discouraging to myself as a potential investor in these assets. Now, I guess going into the last thing, I really want to talk about oil. I think oil is a very important thing to be looking at in retrospect to price, because right now we are at a really interesting point for this asset. And if you do go and you're filling up your car, I think that's one of the most important things that most people realize. You don't even need to be an investor, but the price of oil affects your everyday life, and it's one of the few assets that most Americans and most people in general, they take notice of. And you're noticing that we're at a really low point concerning oil prices. I think that right now politics is playing a huge part in it, but it kind of feels to me that it could be drying out. I would like to see us consolidate down to this area. I guess the one thing I would be looking at is the destabilization in Venezuela, also Iran. Those are two of the biggest oil exporters, and I think that that's going to play a role in really kind of the whole world market concerning oil. And if those continue to destabilize, I think that you could definitely see the oil price increase as there will be more of a demand to fill for the areas that will not really be able to get as much supply of oil from these kind of torn countries, you know, because they're going through their own political arrest. And that's both of them. So I guess what I would be looking for is for us to bounce back. I'm hoping, you know, that we can continue to consolidate a little bit farther. This does look like an interesting point for me. I don't like how we are going below right here, which is going to be this candle. I kind of, because we're already below here, I would like to see us kind of fall down and then hit this line at $61. Have a few weeks of really awesome gas prices before getting our breakout back up. I think that would provide a really good opportunity for at least some really good gains within the market. Because if you do look at this, if we do consolidate down to that point, and if we do get that bounce back up to, you know, normal levels, that's like a 38% return. Concerning, you know, oil, concerning a pretty safe investment as far as an asset class. I would like to get us one more jump. I think that, you know, electric cars are starting to come out. I think that that will impact the price of oil eventually. And I think that that's more of a 5-year thing in retrospect to when it will really affect the price. But I think that there are a few jumps that we can gain along the way as, you know, we will see more fluctuation within this asset class. I think that that's definitely something to come ahead. So, like I said, with that, you know, I don't want to ramble on too long about all of these different assets, but I did want to bring you guys a bunch of different information concerning, you know, the most important asset classes and to kind of get a broad game plan of what the overall ecosystem concerning, you know, the world economy is doing. But with that, if you guys appreciate this video, if you agree with some points that I have to say, jump in our Discord, let me know, let's talk about it, you know, let's create a strategy. I'm always down to talk about markets. You can also comment in the description of this YouTube channel, like if you enjoyed the content, and as always, I hope you guys have a wonderful day. Trade in the market.